sense of what's key? What is the key issue for the FX market?
Well, I think there are a lot of issues, but clearly one of them is how we're doing with the recovery, in particular more concerned from the Asia perspective on what's going on in China, particularly on the monetary front, on the COVID front. That continues to be a preoccupation that has really stopped the renminbi's appreciation path at this juncture. So I would say it's partly a function of the monetary policy, partly a function of the regulatory risk, and lastly, thirdly, on the COVID front.
More and more, the market's expecting that strong dollar to persist. I mean, what's your sense? Where will it go? How high can it go, given that the Fed is only beginning to talk about tapering, but other central banks are already pulling back on stimulus?
Yeah, I think we're probably going to see this for the third quarter. So I'm looking at August to September, where the renminbi can move up to about 6.55 against the dollar. And then we resume into the fourth quarter of the year to about 6.3. A lot hinges as well on the export cycle. The export cycle has been a clear mainstay of the appreciation story in Asia. Not much has been coming through Asia for portfolio flows. With the exception of China, clearly they've been benefiting from the portfolio flow. But it's really been the exporter and the exporters selling dollars that has really been providing the ballast to Asian currencies. And obviously the latest data has shown a bit of weakness on that front. And compounding that, when you think about it, is the PBOC stepping in to release liquidity through the reserve requirement ratio cut. That easing in liquidity, again, has stopped that appreciation path of the renminbi. And in addition to that, we will be getting on Monday the maturing 700 billion renminbi of the medium-term lending facility. And we want to see how much will get rolled over. Our expectation is about 500 billion of the 700 billion will be rolled over. And that will, again, signal to the market that the PBOC is there to hold your hand.
And Claudio, we've seen kind of the U.S. 10-year yield hit some support levels right now. And I'm just wondering, you know, there's all these calls from JP Morgan saying that bond yields have bottomed. Do you think this bond rally is over?
Yes, with a big touch of caution. Yes, I think it's over. You know, in the sense that when we look at the fundamental angle in terms of the growth, in terms of the policy signaling, and I think the Fed has stepped up over the past week or two to suggest that, you know, real rates are too low, this is not good, we need to recalibrate higher. But again, as we've seen this week in the 10-year auction, and less so, but still there in the 30-year auction, that there's still good demand out there for U.S. Treasuries. So as those yields back up, there's going to be quite a lot of demand out there for those bonds. So I can imagine maybe a 20 to 30 basis point back up, but nowhere as nearly as aggressive as, you know, expectations had been at the beginning of this year.
What is the best way to express that then? There's this whole Fed tightening or tapering cycle now. How do you express it when it comes to FX in particular?
Well, I mean, from the fixed income angle, we do like the steeper curves. So the 2's10 steepness is our bias tactically on the US rates front. But from an FX angle, I would say, you know, we're looking for those countries that maybe have a bit more domestic insulation and a bit more domestic demand, less exposure to the global cycle, and where monetary policy has some real rates supportive. So Indonesia is a classic example. So we think Indonesia still is relatively supportive. The commodity prices are there. The real rates are relatively high. The COVID is a problem, but vaccination rates and so forth are improving. So we're constructive there. On the other angle, I think we have to be short on Thai baht and peso. So you get the gist. The gist is here that because the COVID is making everything very idiosyncratic, that you really have to focus on idiosyncratic opportunities. You know, probably the number one lesson that we learned this year is that big global macro plays are, you know, you do that at your own risk. And it's been very difficult because we haven't had an overwhelming global synchronized cycle. What we have had is a very unsynchronized, idiosyncratic cycle. So we have to be very opportunistic, and we have to look at opportunities on a case-by-case. So in summary, would look for CNY underperformance, look for long IDR, Indonesian Rupiah, stay short Thai baht, stay short peso, even though those have adjusted quite a lot already.
The thing is, Claudio, dollar yuan has hardly budged. I mean,
yeah.
Is that surprising? And there's increasing calls for greater flexibility. There's also calls for perhaps the PBOC to cut rates. How will this all play out on the yuan going forward?
Yeah. So one thing you have to look at dollar China is obviously that rate differential between US rates and Chinese one-year interest rates. If you look over the broad sweep of 5-10 years, you can see that overlay with dollar China quite closely. So basically monetary policy differentials matter for dollar China. I still think that the PBOC has caught the ball on growth. But if that doesn't transpire, I think the bigger risk is in 2022. So if you were to look at, let's say, the Bloomberg credit impulse for China, and you were to overlay that with the one-year differential of US-China rates, you would see that credit impulse leads by about 6 to 9 months. So if China credit impulse is rolling over and it's going to be a sustained rollover, that means we're going to get more monetary easing, that's going to compress China yields, and that's going to weaken the renminbi. At the moment, the problem that the renminbi bears have, or the renminbi shorts have, is that the carry is still significant. It still costs a lot of money or negative carry to be short renminbi. And so we need to see that reduced. And that could be reduced if we were to get more negative or more policy easing, which is not our view, but that's the thing that you need to tip it over in order to get a sustained renminbi depreciation.
Claudio, I was looking at more of your calls. One that you said was to sell euro against the Kiwi. I get the policy divergence, but we've already seen quite a bit of movement lower on that pair. How much further does it have to go on that one?
Well, I think we could still see more on that side of things, because I think even though the European economy has been showing outlook of improving and the COVID situation continues to improve, I think the ECB is going to continue to be behind on that curve, partly of legacy issues, partly because of the way that the ECB is deciding policy for a very heterogeneous group. So even if the recovery story continues to improve for the Eurozone, I think the ECB is going to be far behind the curve, whereas for the New Zealand economy, the RBNZ has shown itself to be a lot more proactive. So I think we could still get another couple of percentage points in terms of improvement, in terms of the outperformance of the Kiwi dollar relative to the euro.